Hey guys, it's your boy Jay Kabata back here with another video. In today's video, I'm going to be telling you guys what investment strategy you should use. Both growth investing and dividend investing definitely have their pros, but by the end of this video, you're definitely going to decide which one you want to use. I just want to say that I appreciate all the support you guys have given me. You guys have been showing me a lot of support. If you guys like this video, just like the video. It literally only takes 1 second, maybe not even that, maybe half a second, and that'll definitely help my channel out a lot. And that'll definitely help me reach out to more people that I can help. So the first thing that I want to explain to you guys is what the difference between a growth company is and a dividend company. As I'm sure a lot of you guys do probably know this, but for those of you that don't, a growth company like Apple, like one of the stocks I talked about in my last video, reinvest all of the money that it makes into the company. So what this means is that if Apple's making $100 million, they're reinvesting that back into their products, which are going to make better products longer term. Now this is very important because if Apple's making a better product, or Amazon or Microsoft are making better products, and those products are selling, then that's definitely going to make the price of the stock go up, which you as the investor is going to start to see those gains out of that. On the other hand, a dividend company will actually give some of their profits to you. Now that's very good because if the dividend company is doing good, their sales are doing good, and their revenue is doing good, then that means that you are actually going to be paid more in dividends over time. Just like I explained in my last video with Realty Income, they've actually been increasing their dividend payout for the last 27 years. So now that we got that out of the way and you kind of understand that a dividend company pays you instead of reinvesting it into the company to make their products better, I'm going to show you guys a couple charts because I think this is very important for you to decide what type of investor you want to be. The first chart I'm going to show you is going to be SPY-G and SPY-D. So SPY-G is just a S&P 500 for growth companies, and SPY-D is just a S&P 500 for dividend companies. So as you guys can see here, SPY-G is up 121% in the last 5 years, while SPY-D is up 21% in the last 5 years. SPY-G is currently trading for 57.26, while SPY-D is currently trading for 38.96. Guys, that's a huge difference. SPY-G literally outperforms SPY-D by 100%. SPY-D does pay you a quarterly dividend, so that means every 3 months you're getting that quarterly dividend. But guys, 100% is a huge difference. That just means if you invested $10,000 in there, you would actually have made $10,000 back, while with the other one, it's only went up 20%. I can tell you right now that with those dividend quarterly payments, you did not equate to that $10,000. The next chart I want to show you guys are going to be some growth companies versus some dividend companies. Now, I'm not saying I picked the absolutely best growth companies for this or the absolutely best dividend companies for this, but I did pick 3 companies for growth and 3 companies for dividend, and the point of this is just to show you guys a chart and show you guys what you want to invest in. So as you can see here, all the growth companies are actually going to be in a shade of blue, and all the dividend companies are actually going to be in a shade of pink/purple. I'm using a 5-year chart for this, and honestly the shade of blue doesn't really matter for what company it is. I just want you guys to know that the blue is growth and the pink is dividend. Without me really even saying anything, you guys could just definitely see how all the blue pretty much killed the pink. So we have Amazon that went up around 428%. We have Apple that went up around 340%. And then we have Microsoft that went up around 336%. As you can see here for the dividend, JP Morgan did the best at 156%. And then we have Johnson & Johnson at 49%. And then a low performance from Coca-Cola at 12.09%. Now, again, in those charts, I'm not showing you all the dividend payments that you would have received in those 5 years. But I just want to show you guys that growth completely outperformed all of those dividend companies. Now, I'm not saying a dividend company like JP Morgan didn't do good, 156%, that's great. But if you just invested in Apple or Microsoft or Amazon, those at least got you over 300%, which is literally double what the best dividend stock on that chart did. So how do you choose the right investment strategy for you? Now, I'm just showing you a chart and I'm not actually telling you the pros of dividend investing. Yes, the charts make it seem like you shouldn't do dividend investing, but I'm going to tell you why dividend investing can be a huge pro. When I first started with investing, I was actually a huge dividend investor. Pretty much all the stocks in my portfolio were literally dividend companies. The reason dividends can be super good and it could be the investment strategy for you is because they allow passive income. Now, one of my goals was always to make $500 a month just from passive income of dividends. That is just sadly something that growth stocks can't do. I know 2 videos ago I showed you my monthly income for January and February, but my whole portfolio is not even a dividend portfolio. If I had all my money in dividend stocks, then I would have definitely made more for those 2 months. The main thing I want you to take away from this video is what investor you want to be, because growth stocks will definitely provide you with more money in the end, but that dividend stock will definitely provide you with that passive income, and maybe you can even go get that house that you want. And now it's automatically $500 off because you're receiving $500 a month in passive income. When you look at these charts definitely make me want to be more of a growth investor. If I'm going to be honest with you guys and be fully transparent on my channel, I'm just going to be honest and I am going to invest more in growth. I do like that dividend income because like I did say, I do want that $500 a month in passive income at some point. But if these charts show you anything, it's just that you will definitely have more money in the long term with growth investing. Now, I don't want growth investing to sound all good because in the end, there is a huge negative to it. To actually use that money, you need to sell those stocks. So let's say in 5 years, I made 100% in gains. Well, for me to actually use that money, I would actually need to sell those stocks. With dividend stocks, all you need to do is hold the stock and you're getting that passive income for literally doing nothing. I told you what I'm kind of planning on doing with my investment strategy, but I'm going to be honest, there's definitely not one better than the other. They both definitely provide something that the other one doesn't. Let's say I want my portfolio to be more growth, that's great. I'll have more money in the end, but if you want your portfolio to be more dividend, then you're definitely going to see that benefit of that passive income that I'm just not going to see. At the end of the day, the most important thing I want you to take away from this video is that you need to invest. Find your investment strategy, pick some good stocks, find out what works for you. One of the most important things to being wealthy is to invest that money. I've broken this down in previous videos, but just leaving that money in the bank absolutely does nothing. I've showed how just holding 2 shares of realty income for the price of around $120 will definitely get you more money a month than leaving $5,000 in the bank. Just please invest. Please, please, please invest. It's one of the best things that you can do, and I promise it will definitely change your life over time. That's going to be all for today's video, guys. I hope you guys enjoyed this video. Let me know what investment strategy you want to go with. Comment that down below. Are you going to be a growth investor or a dividend investor? Or are you going to split it 50-50? You're not going to know everything when you start investing, and even later on, you might want to switch that up like I did. I'm definitely not going to sell any of my dividend stocks right now, but I just wanted to show you guys those charts and show you guys how good growth investing can be. And if you're a strong dividend investor, I don't want you to think this video is talking bad about dividends, because dividends definitely have a huge pro that growth just cannot give. I appreciate all the support you have given me. Make sure to like the video if you haven't. It only takes half a second. I'm out of here until next time. Let's keep growing that wealth together.